Hello to my ZINC Income Fund fellow investors. As you all know, we completed our transition that started last June. We narrowed our footprint from 38 states down to California only, with a strong emphasis on our Central California region, which we call the ZINC Community. It's 11 counties, almost 10 million people. That transition is now fully in motion, and I want to give you a clear update on where we stand. Nationally, we are seeing substantial stress. Texas is down roughly 12% in property values. Las Vegas listings right now are up significantly. My last records show it's almost doubled. Florida is in deep stress, and parts of the East Coast are also showing real pressure. Central California continues to hold strong and steady. We have over 40 subdivisions under construction here. Inventory is only up about 2.5%, and appreciation is also up. Most importantly, 60 to 70% of our loans are now concentrated in this region, a region that I understand intimately well. All of our loans are fully 100% performing right here in this area. Since the transition, we have a 100% performing portfolio within our ZINC community in this new focused Central California strategy. We have no new foreclosures in this area, no principal losses, no investor losses. Now let's talk briefly about yield. We expect dividends to increase in the near future. Why? Because we are integrating our financing arm from our fund with properties that we have sourced through our off-market division and vertical. These off-market properties are sold directly within the ZINC community to other investors, coupled with built-in financing. These projects are producing gross yields close to 11%, and sometimes even slightly higher. That positions the fund to receive approximately 9 to 10% as these loans start to cycle through. There's a natural timing effect with all of this. The older loans are still there, and as they pay off, the newer loans come through and replace them. But directionally, we're moving forward to a stronger yield with stronger collateral in the markets where we have operational control over everything. If there is a default within the ZINC community, we have crews, about 7 of them, and a trailer, positioned locally, and we can be at any property within this 10 million population in less than 2.5 hours. That gives me extreme comfort. If I can get to that property in 2.5 hours and solve that problem, it makes me very, very comfortable at night with the protection of our collateral. That level of control really matters. Next, let's talk about reserves. Our auditors at Cathedral Accountancy have requested that we increase our reserves by about 30 basis points, or about 1/3 of an interest rate. What this means is simple. For the next 60 to 90 days, you might see a slight temporary dip in distributions. That capital is not lost. It's being retained to strengthen the balance sheet by recommendation of our auditors, which we agree with as well. We want to ensure that the fund is properly reserved in the event of any kind of dip. This is a very disciplined and strategic move on our part. Let's put back 1/3 of 1% into the reserve bucket just in case we run into an issue. It positions our fund for long-term stability. After that reserve is built over the next couple of months, we expect yields to move back into the 8 to 9.5% range, with a target of 9 to 10% as the new strategy fully matures over the ZINC community right here in Central California. Finally, an update on K1s. They are currently being processed right now by our auditing firm, and they will be arriving shortly. Cathedral is the largest auditing firm in the country for mortgage funds, and obviously this time of year is extremely busy for them. So they do sometimes arrive a little later than what you or I might expect. But they're a very good auditing firm, the largest in the country, and we want to continue to use them to make sure that our fund is fully audited. So with that in mind, your K1s will be coming. We expect them to be released any day now. Thank you for your patience as this process wraps up. And to summarize for you, no new foreclosures, no principal loss to any of our investors. We are going to do a temporary 30 basis point reserve increase, so you're going to see a slight dip in yield. The expected yield trending towards 9 and 10% should happen over the next 3 to 10 months when this transition is complete. Our portfolio is performing very well. We are very well positioned for stronger returns in the near future as we begin our focus on Central California and the rest of the state of California, both performing exceptionally well in the real estate market. Our average days on market here in the ZINC community is a staggering 28 days, very, very low. So with this in mind, I want to take advantage of that. As always, I'm available here for you. If you'd like to speak to me directly, give me a call. Thank you for your continued trust. Make it a great day.